Hello and welcome to this edition of Biztalk. I'm Guanxin in Beijing. Amid the rising global economic uncertainty, it is imperative to safeguard financial stability through cooperation and trust. China is taking steps to mitigate risks in the real estate sector, advance green financing, and promote high-quality development with new quality productive forces. How can financial regulation help restore cooperation in a divided world? And how can we ensure financial policies spur growth? And how should China maximize its financial system to drive growth while properly handling risks? To get answers, we're very pleased to be joined in the studio by Matthew Blake, head of the Center for Financial and Monetary Systems and the executive committee member of the World Economic Forum. Thank you so much for coming to our studio today.
It's a pleasure to be with you.
So Matthew, let's start with the property sector because it's been a focus on media lately. China just rolled out a series of forceful measures to support the real estate sector. What are the take on the effect of these policies?
Yeah, well, again, terrific to be here with you. The property sector is a material sector within the Chinese economy, representing roughly 20% of GDP. It's also a major area where households invest and share their wealth in a generational way. So I think the most recent intervention from the government here, 300 billion RMB, and a real emphasis on moving toward more affordable housing options for individuals from 5% to 30% is a material step in the right direction. And so it's likely a multi-year process. It's a complicated process because it involves the private sector and the public sector. And it's going to be with us for quite some time, but nonetheless, I think the government's role in terms of setting that market and setting the direction is critical.
And what are the priorities for the government to ensure or to try their best to steer a smooth transition?
Yeah, I think part of it is certainly financial stability. Given how intertwined the economy is and how important the real estate sector is as a percentage of the overall economy. It is fundamental to do this in a measured fashion, and the role in which the government can deploy assets into the sector in a meaningful way and also accomplish policy objectives such as providing a home for individuals who may not have that type of setup at this point in time is really critical. So the ability to address the affordable housing topic simultaneously by creating greater capacity there and having a transition, also helping the migration of workers and continuing the urbanization process is a multi-pronged approach, and that's certainly the role of government to try to hit multiple objectives there.
And China is also developing the REITs market, and which is expected to enlarge the tools for investment in the property sector. What progress do you expect on that front, and how significant is this market? Yeah,
our team has been quite involved actually with some of the local players on looking at REITs. REITs have been part of the tool set, let's say, for a few years here. Really, I believe the first launch was back in 2020. That market continues to need to be deepened and broadened. It's an avenue toward greater liquidity and certainly also a diversifier for institutions and individuals as they think about investing in the property sector. So it's a really important tool. I would just stress, though, it's not a panacea. It's not a cure-all. It's one of many steps, one of many avenues that needs to be explored here in order to free up this market.
So another perceived challenge about Chinese economy is its aging population. What policies would you suggest to tackle this problem?
Yeah, this too. So the population, I was struck by some of the most recent statistics I came by. Today, there are 5 workers active for every retiree. By 2065, there will be 2 workers active for every retiree. So that's quite a stark change. I believe by 2065, roughly 25% of the overall population will be above 65 years of age. This is a challenge for China, but frankly, it's a challenge in many economies, in Europe, in the United States, and elsewhere. And even relatively young countries like India, over the next 25, 30, 40 years will have similar demographic changes. So as a team at the World Economic Forum, we're very focused on this notion of a longevity economy and the approach by businesses, in particular the private sector, and the role that they need to play in terms of offering products and services that allow for a dignified life with strong, hopefully, financial resources at the core, but also with respect to workplace practices So upskilling, reskilling, and also combating some of the biases toward an older workforce is really critical. And I think those norms and those principles are applicable around the world in a corporate context. Here in China as well, the pension system is facing some headwinds. I believe by 2035, it's going to be on some hard times. And so fundamentally, policymakers are looking at essentially the retirement age, which on a relative basis here in China is kind of low compared to other countries around the world. And while that's a bit of a tenuous discussion because it's hard to understand that one might need to work longer, this is a conversation that is going on in multiple jurisdictions around the world. We can look to Europe and France, where there were some very fraught discussions earlier this year.
Now, let's talk about green finance. What are your views on the progress in this sector for China, and what are the keys to better support the green transition of the economy?
Yeah, well, I know the green transition and the green economy is a fundamental point that is focused on here domestically. I believe the green economy represents somewhere around 10% of GDP at this point in time. That's certainly going to grow. It's been remarkable to see China's evolution as it relates to batteries and hydroelectric and solar and wind. There's clearly a commitment to net zero. I believe peak carbon usage will hit its crescendo in 2030, and then there's a gradual push toward net zero in 2060. So those are all very positive elements. We continue to see opportunities in green bonds and green loans. And also in some of the disclosure requirements. I think it's really important to address any concerns as it relates to greenwashing, because that has an erosion effect on investor confidence. So stricter standards, greater scrutiny, these are really important steps.
And do you think there are more room for cooperation internationally on green financing? What role do you expect China to play?
Yeah, I think there's absolutely room for public-private cooperation around green finance. The World Economic Forum has been at the forefront of looking at climate change for well over 20 years. We run a global risk report that receives a tremendous amount of acclaim. And if you look back over time, climate change and climate challenges has been up in the top of material risks for many years here. It is a challenge that is a global challenge. And our hope is through the forum's platforms that we can bring people together in a constructive manner to help address some of those core issues around climate. In particular, we're looking at hard-to-abate sectors. So think about steel, aviation, trucking, and the important role that financial institutions can play in terms of funding new technologies, such as sustainable aviation fuel, carbon capture sequestration, hydrogen. These are all projects that are extremely important but require capital, and there's a fair degree of risk. So when we're thinking about public-private cooperation around the world, blended finance, the ability for different actors to come together with complementary risk profiles and deploying money toward those projects, we see an absolute opportunity there, and we're trying to leverage our amplification ability as an institution to help address that.
What is your view on the risk of fragmentation of the world economy at this point, and what is your outlook for the global economy?
This word, fragmentation, is a really important one. I think that question can be answered in a couple of different ways. First, when we look at the macroeconomic environment globally, we're at a really interesting moment. You know, if it's North America or Europe or Australia or New Zealand, many economies, many large economies, have been in a multi-year battle against inflation. China's a bit different there. Their inflation is very well under control. If anything, there are some deflationary pressures in the economy. But nonetheless, Western economies have been working hard to bring down inflation. There's been a bit of plateauing as it relates to central bank policies. But now there's a reflection vis-a-vis economic growth on whether or not some stimulus might be possible. And this is true particularly in Europe, and the Swiss central bank has actually already moved its rate stance not that long ago. The core point here is that we are entering into a period where we will see divergence across different geographies in their interest rate policies. And that will introduce different opportunities and challenges and perhaps some volatility. I think the key thing is, can the global economy manage this transition without recessions, deep recessions, or some sort of financial stability event. And certainly in the context of the United States, we've gone much longer than anyone would have assumed in terms of an environment where rates were to be cut. And the most recent projections now are for a September easing. But the last time we met back in January, the assumption there was that we would have multiple cuts by this point in time. And that just hasn't materialized. So it just goes to show that we are in a dynamic environment, and I think we're going to see greater differentiation between geographies down the line. So that's one piece of the fragmentation discussion.
Right. And how can we step up financial regulation, collaboration in the face of these fragmentation risks?
Yeah. So the other segment of fragmentation is geopolitical. And here, the World Economic Forum, as a global platform, is looking to engage and to bring people together to discuss and hopefully to compromise on different issues. We're living through a very fraught moment in history. Fundamentally, we do need more cooperation. I think the key as it relates to the financial sector is finding areas where there's common ground. Financial stability is certainly an example. AML, anti-money laundering, KYC, terrorist financing, things of that nature as well. And also climate. I think there's a real opportunity there to work together across borders. So we're trying to deal with this more fragmented environment. We're trying to provide a roadmap for financial institutions to think strategically about that. And this is a core concern of ours as we look forward to the remainder of this year and beyond.
Well, you talked about the tension between China and the U.S. Of course, it's one of the most important relationships in the world. We see some positive signs. For example, the two sides have started the dialogue on AI development, but there is also tensions on trade, on the green industry capacity. In your opinion, how can the two largest economies manage their differences and collaborate on these common challenges of the world?
Yeah, I think absolutely through dialogue. I think it's a great signal that communication channels have reopened and reemerged there. That's really critical, and that's a first material step, certainly in the right direction. But there's more that can be done on that front. The collaboration around new technologies, for instance, artificial intelligence, the sustainable finance theme that we mentioned, these are all areas where parties can come together and collaborate. So finding common ground around those fences to collaborate is really going to be the key piece.
Well, let's hope the dialogue keeps going. Well, thank you so much for your insights, Mr. Blake. With that, we wrap up the first part of this edition of Biztalk. Coming up next, our Zhu will talk to Honson To, Chairman of Asia Pacific and KPMG China, to get his perspective on China's economy. Stay tuned.
Here on Biztalk, we connect the dots, shedding light on the real stories behind the economic landscape. To better understand China's dynamism and the economies and rhythms of business, propelling new drivers of growth.
China.
Biztalk, your window into China and the global economy. Only on Biztalk.
Each day, there are millions of stories. Each one can open new perspectives, new possibilities. Wherever you look, we are there to see, discover, explore. We put the pieces together to find what really matters to you, all around the world, all around the clock. Our reporters are at home across the globe. From our headquarters in Beijing and production centers in Washington, Nairobi, and London. Stories from across the globe, reaching people across the globe. CGTN. See the difference. 360-degree profiles of industry movers and shakers, tech mavericks, and policymakers. We drill down on their success. We ask how they set strategy and how they navigate in an increasingly competitive market. Real talk, real business. Join the conversation. Biztalk, only on CGTN.
Thank you so much for joining our interview.
My pleasure.
Yeah. What's your take on China's economic growth target of around 5% this year?
Well, first of all, the 5% is, around the world, it's considered a high GDP growth percentage. And it's a repeat of the 2023 growth target. I think it's already been recognized, including by our Premier, that it's going to be a challenging target, but I think we should have every confidence that we can achieve it.
China will continue to boost spending to achieve high-quality economic growth. So what do you think still can be done in China to drive consumption?
Well, we should recognize, first of all, many things have already been done, including for so many years, China's efforts in lifting people out of poverty, now resulting in a middle class that is probably the biggest middle class in the world by some measures, well over 200 million people. Mm-hmm. And that will create a very strong base for consumption growth. In addition to that, of course, we still have many people that are based in the more rural areas, policies that can help them become more prosperous, in some cases maybe even continuing to migrate into the big cities around China. That will also help consumption. But also, even on the supply side, of course, we have many industry policies right now encouraging the development of high quality, new quality industrial growth. And all of these capabilities that will allow industries to create new products and services will, I think, also do a significant amount to help boost consumption growth.
Yes, you mentioned about new quality productive forces. That's really a hot topic recently to drive China's economic growth this year. So how do you read into its significance?
The word quality is not new to Chinese economic policy. Yeah. It's been mentioned, my reckoning, at least for the last 10 years. So this is really taking the previous quality agenda to another stage. Surely China is still in the transition phase of economic growth. In previous decades, maybe much more high growth, but not so much focus on quality. Mm-hmm. Nowadays, the focus very much is on not just a GDP number, but what is the nature, what's the shape, truly what's the quality of that growth. And so you'll see policies encouraging new industry areas, new energy vehicles, for instance, the green economy. These are all areas that will be extremely important to the future growth of China. So maybe while the number is no longer 10, 15% growth a year, and maybe at the 5% growth a year level, the quality of that growth is significantly improved. I think that's a lot more important, frankly, than simply volume, because a pure volume game is, I don't think, a sustainable model for any country.
China has also issued an action plan to boost the development of new quality productive forces. How can these forces develop new consumption opportunities?
My interpretation of these new policies is that let's focus on one particular area. Quite a lot of efforts on say, supply chain development. China is already a significant or the biggest manufacturing economy or country in the world. At the moment, there's still room to further improve the leading position, not just through developing the domestic manufacturing economy, but also hoping to bring in additional foreign direct investment into China, right? I think all these policies will help do that. increase the level of investment, both domestically and from foreign destinations. And at the same time, because we are adding not just the volume, but also the diversity of investments, invariably the nature of production, the nature of services will evolve to a point that will stimulate, I think, significant consumption opportunities, which is the ultimate goal, I think, of the current economic policies.
Yeah. And speaking of developing new quality productive forces, the rapid development of AI is definitely one of the trends. How do you see AI changing the landscape of innovation and efficiency in the coming years?
Well, it's amazing, isn't it? Even just a year ago, 2 years ago, nobody was really talking about AI.
Imagine.
And all of a sudden, everybody's talking about it. Of course, we have some pretty impressive demonstrations of the capabilities of AI. We have some of our own demonstrations here,
which
we
virtual character.
I think the impact of AI will be very significant for all companies and all industries, and really for each company, from the front office, so the way businesses will service customers, provide kind of the storefront to attract customers, to the way they run the middle office, the back office. So for instance, how they manage risks, how they evolve their delivery models, how they actually provide their goods and services to customers, how they run their human resources policies, including recruitment, right? How do you actually screen and scan candidates coming into the company? So I mean, just those few examples alone should give business leaders a lot of thought on how they should evolve their own strategy to incorporate AI, not just to make some incremental improvements, but actually to further transform the businesses they have to run.
Yeah. And as to KPMG, what changes has AI brought to?
Well, KPMG, we provide audit, tax, advisory services to many, many corporate customers around the world, leading companies around the world. It is by nature a very human-driven service, a lot of human interaction. We hire a lot of people, we train them up, not just on technical skills, but how they can actually interact with clients. But you can imagine, as we strive to deliver our services in future, for instance, signing an audit report or delivering transformation services, some of those human skills or capacities will end up being operated via AI. And that is not just to lower costs, and frankly, it remains to be seen whether costs can be lowered because technology is expensive, but perhaps more importantly, to improve the quality of what we can do, the consistency of what we can provide to our clients. And so if you look at ourselves, you can see in all of our service areas the infiltration or the injection of AI capabilities in specific processes or procedures of the work that we undertake. This will only increase with time. Right now, we've already begun to explore ways of how we can do that. I can see in a few more years, a significant amount of our work could be undertaken by AI.
Yeah, let's wait and see. China is also stepping up efforts to attract more foreign investment, such as releasing 24 measures to further attract foreign investment. So through your observation, how has China's investment environment changed in recent years for foreign investors?
Yeah, it's a very good question. Certainly during the COVID years, foreign investment did kind of take a backseat or slow down to an extent. Understandable why, because international communications took a bit of a hit. And that's true not just for China, but for all countries around the world. So as we are still in the, I think, still in the reopening up phase, I think these 24 measures it couldn't be more timely. You know, at the moment, we would still like to see even more foreign investment getting interested in coming back into China, investing further into China, to boost their existing footprints and investments in China. And we can see, not just local governments, local policies. China is an economy that really welcomes all of their investments. And hopefully, through actions and policies that we've just discussed, we can really see a rapid increase in foreign direct investment in the next 1 to 2 years coming into China.
Yeah, and to further attract these foreign investment, what else still needs to be done, do you think?
Well, everyone has a role to play, right? I think all of us who, especially business leaders like myself, who have the opportunity to travel overseas, and we have a big community of us, really should be, wherever we go, tell the China story. What's the economy actually like? How much development, positive developments actually happened in the last 3, 4, 5 years since the last time someone might have visited the country. And hopefully through activities like this, or even inviting our global business leaders coming back into China to have their meetings here, will help improve that business and investment sentiment.
Yes, and just like you said, China is still promoting higher level of opening up, despite against the backdrop of adverse globalization. So how can these opportunities, these opening up measures, be translated into development opportunities?
The business community is wise. They also have to deliver returns to shareholders. So wherever the business environment is positive and they're helpful, they will come. And I think that's exactly the situation that China is in. So I'm very confident that with the activities that are being undertaken today, the policies that have been introduced, that we will see that improvement coming in the next little while.
And KPMG just opened its new office venue in Shanghai. It is now the largest office venue of the company worldwide, right? So what does this indicate?
Well, right now, as we have this discussion, we're sat in what we call the campus, which is with a K, which stands for our new workplace in Shanghai. It is a significant investment on our part, but it's also a very necessary investment, because we do see the growth opportunity for our people, for our clients, not just in China, but especially in this particular location. We have been pursuing a strategy of developing regional growth, and in China that means, I think you might be familiar with Jing-Jin-Ji and Greater Bay Area, but of course a huge growth engine is right here in the Yangtze River Delta area. So our investment here, the time, effort we've spent developing this workspace, hopefully will be good for our people, will be seen by our clients as a nice place to gather, and we welcome them to come here and experience it for themselves. But it's also an indication to the world that we have every confidence in the economy here, in the policies here, and we're all in.
Yeah. Thank you so much for
Thank
your
you.
sharing.